By now you might have seen the news. Zipco will be acquiring Sezzle, bringing together two of the largest ASX BNPL companies together. Over the past period, we've seen consolidation beginning to play out in the increasingly competitive BNPL space. Of course, Latitude and Hum, and most famously Afterpay and Square, now known as Block. But today, investors are trying to assess what this new Zipco and Sezzle deal could mean. Values Sezzle at around $491 million. It's an all-scrip acquisition. And so investors are wondering, what does 1 + 1 equal? We of course know that the buy now, pay later space has had its fair share of headwinds, with share prices across the BNPL sector down and down significantly. Today, we'll talk about the deal itself. We'll talk about the current position that Zip and Sezzle find themselves in, and then we'll talk about some of the big questions that investors are wondering surrounding this deal, as well as the headwinds around the broader BNPL sector. And so I thought before we discuss the actual deal itself and explore the state of the ASX BNPL space, let's have a look at some of the numbers that Zip have also recently released for their first half of the FY22 year. I guess first and foremost, the thing that really draws attention is that the top line growth is strong, and it continues to be strong across the buy now, pay later space. Of course, most investors are familiar with that narrative. However, what has been concerning for not only Zipco, but some of the other companies in the BNPL space is the unit economics have begun to decline. And of course, there's much more difficult headwinds that are starting to emerge in terms of credit across the board, as well as consumer confidence, because it's going to be interesting in an rising interest rate environment, as well as, of course, an environment where inflation continues to rise, which could put pressure on consumers' willingness to spend, how these BNPL players will be able to navigate that. This is a bit of a snapshot from Zip's investor presentation. However, you can of course go to their recent half-yearly results if you want to dig a little bit further down below at the actual numbers themselves. But some of the key takeaways from it was the cash transaction margins fell, bad debts rose and rose quite sharply. That was as a result of course, the broader macroeconomic landscape as we come out of the economic recovery from the downturn and stimulus starts to fade, but also because of the willingness to expand aggressively into new markets. So it'll be fascinating to see how this is navigated moving forward. And then there was an expanded and large cash EBITDA loss. We can see this at the bottom line here. It was quite significantly, the cash EBITDA loss was over $100 million. And that was, of course, quite a difference in comparison to the first half of FY21, where there was just around about a $200,000 positive cash on that side. So it'll be interesting to see where things play out from here. Keen to know your thoughts on it all. Drop in a comment below what you think about Zipco's recent numbers and what you think this acquisition of Sezzle could mean for the broader Zip group moving forward. And so Zipco and Sezzle. As mentioned, Zip will be acquiring Sezzle with an all-scrip deal. The Sezzle holders will receive 0.98 shares of Zip as a result of this. Sezzle's valued just under that $500 million AUD mark. It's around about a 22% premium based on the current spot prices of the shares. The focus, as often is for these types of agreements, is to bring together the two entities and hope that the combined entities will be greater than the individual sum of the parts. And they're aiming to unlock synergies across relatively similar businesses. So of course, when you've got similar businesses, there is that ability to unlock cost savings. You can potentially reduce staff headcount. You also have the ability to integrate your platforms, integrate your back end, and integrate your systems together. And that should hope to bring in a range of different cost savings and cost benefits that the Zip group will be hoping to see flow through by FY24. Along with this piece of news as well, there is around about a $200 million capital raise, both with an SPP as well as an institutional capital raise. It's at a discount to the current share price, of course. It's at $1.90. So it'll be very interesting. We know that around capital raises, often the share prices tend to trade in and around those levels. This, of course, is at around about a 10 to 15% discount to Zip's current share price. So we're waiting to see when Zip emerges out of its current halt, how the share price does trade. Along with this too, Zip will be establishing an ADR program. Will provide them greater access to capital and access to new capital markets over in the US, obviously help to raise their exposure. And so it'll be interesting to see how they go as they continue to expand their US footprint. I think just having a look at some of the breakdowns here as well in terms of geographic mix. As we know, Sezzle is predominantly focused over on the US markets. In terms of product mix, Sezzle has got that broad pay in full focus, as you can see here, while Zip is much more diversified across different types of accounts with longer duration as well, lending. And so we can see here out of this deal and some of the discussion as well that came out of the presentations today, looks like Zip will be really concentrating on these core markets, the Australia and New Zealand market, and then that US market. They'll have over 50% up to around 60% of their geographic mix now in the United States after this Sezzle acquisition. position. And it would be very interesting to see how they try to play out on some of those other markets as well, because I've been making investments into other key strategic markets, but now it looks like they're going to be going heavily focused on this US ANZ side for the foreseeable future. And so, as I'm sure everyone's familiar with, the ASX BNPL sector has been difficult. The buy now, pay later sector has got a range of different headwinds, which we will talk about later on in the video. But I think it's worth noting that the current positions of both Sezzle and Zipco have really come under pressure. Share prices down by well over 2/3 over the past year. Of course, we're all familiar with the narrative surrounding rising interest rates, which of course is raising the discount rate used for discounted cash flow analysis and for the valuations. It's putting many in the tech sector. It's not isolated to the buy now, pay later sector, but many of these unprofitable, hyper-growth technology names have really come under pressure, and Zip, Sezzle, and the broader BNPL space have definitely not been immune to that. Along with that as well, we have started to see this transition to value stocks as well. And so as we head into this next stage of the cycle and as the economic recovery continues on, it's going to be very interesting to see how some of these technology names continue to trade into the rest of 2022 and moving forward from there. And so then with that, I guess that brings us to some of these big questions surrounding the BNPL space, and particularly how this Zipco and Sezzle merger will play out over the coming months and coming quarters before it's finally brought into action. What happens now? I think first and foremost, of course, the rebrand will be interesting to see how that rebrand goes. How much is it going to cost? Of course, there has been a capital raise over this past period with this piece of news, but how is that going to go, and how is the integrations between the businesses going to play out? And then on the other side as well is, of course, that discussion surrounding the customer overlap. Been reading a lot of different forecasts and discussions surrounding that, with some forecasting that there's potentially 10 to 25% of the customer base that they share between themselves. We have to recognize that both Zip and Sezzle have a relatively homogenous customer base, so they're of course going to have to be able to navigate that, and they want to avoid cannibalizing their own customers and their user bases, but they will have developed plans out moving forward from that, so watching for that is something that's going to be fascinating. The global expansion focus is something we touched on earlier on in the video too. Of course, Zip recently and Sezzle has been testing their footprints into different markets, but Zip have been expanding and trying to make a range of different strategic stakes into different types of companies, providing them exposure to different regions. But it does look like for now, in the short to medium term, they're going to be focused on their core markets in the US and Australia and New Zealand, while continuing to support their other acquisitions as well. So it'll be interesting to see how that focus goes, and also watching for some of those growth numbers in the other markets as they do continue to mature and emerge over the next few years. Building an ecosystem, of course, most fintechs are aiming to do that, but Zip do have that focus of being able to build a digital wallet type system. They've talked about crypto, of course, previously, potentially looking into different types of lengths of lending and different types of customer bases as well. So that's going to be interesting to see how they can build out that broader ecosystem. Of course, leverage some of the Sezzle assets and knowledge to be able to do that. And then this pathway to profitability. It's definitely been more of an important question over the past 6 to 12 months, as the market's assessment of valuations and focus on valuations has, of course, started to shift over this past period. We've started to see the focus now on cash flow generation rather than unbridled growth into perpetuity and being able to continue to spend and spend and spend, and looking into profitability in years to come. So Zipco have outlined that they're working towards pathway to profitability that they believe will be completed in FY24. And so, of course, there are definitely opportunities that can be unlocked by scale, increased volume, broader access to different types of customer bases, and combined merchants as well. But we do have to recognize that there are BNPL sector headwinds too, that of course put valuations and share prices under pressure. But it is worth noting as well as we look forward to the upcoming period. Before we discuss some of these, if you do enjoy the video, don't forget to hit the like button. If you're new here, make sure you've subscribed, turn your bell notifications on as well. Won't miss any of our daily episodes, and we'd love to have you join the community. So I think first and foremost, of course, rising interest rates, inflation, and it'll be interesting to see the narrative surrounding consumer demand and consumption over this upcoming period. We know there's been a very significant coordinated fiscal and monetary policy stimulus over the past 12 to 18 months coming out of March 2020. That has meant there's very high household savings levels, there's been a significant amount of consumption, and as well with that, there's been a lot of e-commerce purchases as well, which of course BNPL is really able to facilitate as people have been staying at home with lockdowns. But there are going to be changing consumer trends, and we know that we are starting to transition towards a more service-focused economy versus the predominantly goods-focused economy that we've had as we've been staying at home. So watching how the BNPL sector is able to navigate that will be interesting. Growth valuations, large losses. I think we've touched on it, but it's something to be cognizant of, particularly in this upcoming period. The regulatory overhang, something that all BNPL investors continue to think about. Of course, it is still regulated quite differently to many of the conventional banks and the credit operations, but over time, it's going to be interesting as the buy now, pay later sector and segment continues to expand, how the regulatory overhang does affect the sector. And then increasing competition. This has been one that it's been a narrative that's just continued to expand over time. We've heard about PayPal, of course. We know that Block's now entering the space with its acquisition of Afterpay. Of course, CBA's even started to dip its toe in. But as a result of that, increasing competition, of course, is putting pressure across the broader sector. And I think underpinning all of that, it's going to consequently mean that the BNPL sector is likely to continue to consolidate moving forward. I think most people could admit that the buy now, pay later transaction method is here to stay, but the question is, who is going to be delivering that? Will it be the big banks, the financial institutions? Will it be technology companies that are predominantly facilitating that, like PayPal? Who knows? Will we see companies like Apple or Facebook or Amazon or other companies look to make some potential acquisitions or build out their own business units internally to be able to facilitate some of these transactions? We'll have to wait to see how it plays out. There has, of course, been some discussions that a combined Zipco and Sezzle entity may be more interesting and appetizing to potential suitors who might be looking at a longer term acquisition from whatever type of angle or sector they may come from. Still early days, it's a big piece of news, it's quite significant for the broader BNPL sector. Let us know your thoughts. A reminder, I'm not a financial advisor, nothing we discuss is financial advice. Companies, they're not buy recommendations obviously, but hopefully it's an interesting general discussion as a starting spot for you to go away and do your own research from. Thank you so much for joining us. For now, stay well and happy investing.